Did you know most Bitcoin traders lose money because they treat it like a slot machine? Let's find out if you can actually beat the odds using a simple dice game to explain it all. Hey there! Today we're diving into Bitcoin trading, breaking it down in a way that's super clear by comparing it to rolling dice. You'll see why so many traders crash and burn. What makes Bitcoin's price so wild? And if there's a way to come out on top, stick with me because by the end, you'll know how to approach Bitcoin trading like a pro, not a gambler. Let's start with the big problem. Bitcoin trading is a roller coaster, and most people jump in without a clue about the real risks. Picture this. You buy some Bitcoin because you saw it pumping on Twitter or heard someone made a fortune. The price is spiking, you're hyped, but then it crashes 20% in a day. Sound familiar? That's the challenge. Bitcoin's price swings are insane, sometimes moving 10% or more in hours. Driven by news, big investors, or just pure hype. It's like rolling a dice where you need a 6 to win, but half the time the dice lands on a number you didn't expect. The stats are rough. Studies show over 80% of retail traders lose money trading crypto. Why? Because they don't get the odds. They see Bitcoin hit $60,000 and think it's only going up. But markets don't care about your feelings. Fees, spreads, and sudden drops can wipe you out if you're not careful. It's not just about picking the right coin. It's about surviving the chaos. Now, let's explore this with our dice analogy to make it crystal clear. Imagine you're playing a game with a 6-sided dice. If you roll a 4, 5, or 6, you win. 50% odds, not bad, right? But if you roll a 1, 2, or 3, you lose. Bitcoin trading feels similar. Let's say you buy Bitcoin at $50,000, betting it'll climb to $55,000. You've got a 50-50 shot, maybe, based on your chart analysis. But here's the catch. Just like in our dice game, every trade has costs. You've got exchange fees, maybe 0.1% per trade, and the spread, which is the gap between buy and sell prices. These stack up fast. If you're making 10 trades a day, those fees chip away at your wins, turning a fair game into one where the odds tilt against you. Let's dig deeper. Bitcoin's price isn't just random. It's moved by big players like whales who dump millions to shift the market, or events like a country banning crypto. That's like someone sneaking a weighted dice into your game, making it harder to hit your number. To develop a better approach, you need to think about probability. In dice, you know each number has a 16.7% chance. In Bitcoin, you can't predict exactly, but you can study patterns. For example, Bitcoin often spikes during high trading volume, like when US markets open. That's like knowing your dice rolls better in the morning. But even then, it's not a sure thing. One trick is to backtest your strategy. Look at past Bitcoin price data and see if your buy signals would have worked. Say you test a simple moving average crossover strategy, where you buy when the short-term price trend crosses above the long-term trend. If it wins 60% of the time after fees, that's a start. But here's where it gets real. You need to manage risk. Never bet your whole stack on one trade. A good rule is risking only 1% of your account per trade. So if you've got $1,000, you're risking $10 max. That way, even if you roll 5 bad trades in a row, you're still in the game. I've seen traders go all in on a moon prediction, only to lose everything when Bitcoin dips. It's like betting your rent on a single dice roll. Don't do it. Let's paint a picture to make this stick. You're at your laptop, charts open, Bitcoin's price ticking up and down. Your heart's racing as it nears a resistance level at $52,000. You buy in, feeling the rush. The price climbs to $50,500, and you're dreaming of profits. Then, a tweet from some billionaire tanks the market, and boom, Bitcoin's down to $48,000. Your stop loss kicks in, and you're out with a small loss. That's the dice rolling against you. The key is staying calm, not chasing that loss with a bigger trade. Instead, log it, review what happened, and tweak your plan. Maybe you entered too late or your stop was too tight. Over time, this builds your edge. Here's the big moment, the climax that changes how you see Bitcoin trading. Can you beat the odds? Yes, but only if you stop playing like a gambler and start thinking like the house in a casino. The house always wins because they have an edge on every bet. In trading, your edge comes from discipline and strategy, not guessing. Pros don't win every trade. They win more than they lose over time. For example, I switched from chasing hot tips to using strict rules. Only trade high-volume hours, set 1.3 risk-reward ratios, and never risk more than 1%. Suddenly, my account stopped bleeding. That's the shift. Treat Bitcoin like a probability game, not a get-rich-quick scheme. Your edge might be as simple as waiting for strong setups, like a breakout with high volume, and cutting losses fast. To sum it up, Bitcoin trading is like rolling dice, full of chance, but you can tilt the odds with the right moves. Understand the wild swings, build strategies with an edge, and stick to discipline to avoid going bust. It's not about catching every boom, but surviving the busts and coming out ahead over time. Check the link in the description for help and recommendation. Hit subscribe for more crypto trading tips.